One of the most exciting things for me is rental rates. We have looked at, since we arrived here in 2009, we looked at the $30 per square foot barrier as an amazingly huge barrier, which is actually a ridiculous number because, as Ali knows very well, the cost of new construction is such that you need $55 per square foot to justify new construction. So we have been languishing here where rental rates have been nowhere near supporting new construction, and now we're breaking well out into the 30s, and our St. Pete building's up in the low 30s per square foot, and we're beginning to see now in downtown in the upper 30s per square foot for 1980s vintage product, and of course with the SPP achieving now $55 per square foot, we're going to begin to see new construction. Now, what is the benefit of all this new construction is that when an out-of-town company, let's say a tech company, is looking to relocate, there is now some quality inventory for them to enter into and jump into. So I think that's one of the more exciting things that's happening in town.
Larry, your recent acquisition involved crowdsourcing. Can you educate us?
Sure. When I first heard about the idea of crowdfunding for investment of real estate, I laughed. I thought it was the flakiest thing I had ever heard of. And then we looked at it pretty closely and we began to examine it. For those that are not familiar with it, it is basically marketing over the internet to have people invest in your real estate deal, whether it be an existing deal or an acquisition. And it seemed quite flaky, particularly with the word crowdfunding. So we looked into it and we researched it, and here's what we found. First of all, the legal structure is exactly the same as it has been for 50 years, which is a private placement memorandum and an operating agreement. And we also make sure that all of our investors are accredited per the definition per the SEC. That's a certain net worth and a certain income. And we have a third party expert verify before that investor can come in that he or she is in fact accredited per the SEC. So once all those qualifications are satisfied, we can actually advertise. This was as of 2012, the Jobs Act, in order to generate new companies and give companies the opportunity to grow and expand. Advertising for crowdfunding was legally allowed. So we actually can go on the internet and go on to social media. So friends of mine at my poker game were mentioning the fact that they actually saw our most recent acquisition on their Facebook account and they couldn't get rid of it. They were complaining to me that it was all over the place. So it's actually, if you think about it, it's almost the same thing as the Sears catalog is to Amazon. Amazon has just figured out how to do it faster, how to make it more accessible, to have more products, but it really is not that, Amazon itself is not that big an innovation as you may think it is, because the Sears catalog used to have thousands of products on it. It's just that they can do it faster. So, for example, for the last 10 years, people raised money, not through crowdfunding, but they went through broker-dealers that were your financial planners, the guys that sold you insurance or stocks and bonds, and they charged 7%. And then the developer charged 2 or 3%, and then there were legal fees. By the time the investor got in, he was getting 88 cents on a dollar. So with crowdfunding, we bypass all of that. The total fee structure is about 1.7% to the portal that we use to do it. And so our investors came in and got a much better deal than they would in some of these older structures. And we've now done 2 deals, one for $9 million, which was an existing property we sold off a 49% interest. And we recently did an acquisition where we raised $6 million. And we're developing our own website presence where we're actually going to raise money through our own fund, all online. And the beauty of this for a developer is it's an unlimited reservoir of the ability to raise money. What keeps me up at night? My prostate. Sorry, I couldn't resist. It's actually true.
need to step away right now.
So everything I showed about interest rates on the way down are really nice on the real estate side, but if they reverse, we could be in trouble. And what's happening at government level is nothing short of reckless and irresponsible to the nth degree. The endless printing of money, the trillion-dollar deficits as far as the eye can see, is nuts. And eventually, I don't know when, that's going to catch up to us. So what we're doing on every deal that we have is we are locking up interest rates as long and as fixed rate for as long a loan term as we possibly can. My belief is with some of these long-term loans that we'll be doing, if we do get into a huge run-up of inflation, we will be paying back that loan in basically fractions of a dollar in terms of payback because of the potential deflation or inflationary value of our real estate going up and the interest rate still remaining fixed. So it actually could wind up being a profitable thing for us, but it's not something I really look forward to for the economy. I actually would just give you a comment about something that I've been theorizing. It's purely a theory, but if you look at China, whole swaths of China did not have telephones. They never had hard lines. So when cell phone technology came out, they went straight to cell phones. I think we're going to go straight to self-driving cars here in Tampa. I think that by the time mass transit actually happens, self-driving will probably be way ahead of it.